Excellent. Okay. So a little bit after the hour here. So I wanted to make sure that we gave ample time for everyone to join if they were able to join. As you know, obviously, first change in some 483 days there or something like that for Starpath. So I'm sure plenty of you have had a pretty busy day with some trading and with some questions. So I'm going to hand it off to Tony here to really sort of lead the charge as it relates to answering some questions and delivering some of his thoughts around some of the change here. And then once he's sort of given you guys a bit of an update, really we're going to give you guys a chance just over the next half an hour or so to really ask some questions and figure out where we are, what's next, and what's going on. So Tony, with that, I'm going to hand over to you and let you take it away. The floor is yours.
All right. Thank you, Tom. Appreciate it. I'm going to share screen here, and I did some quick slides kind of going over what just some interesting overall information as well as Sherman specific. So let's start off with of the Starpath indicator. It used to be called, or one of the names was balance of strength signal. And the goal of the indicator is to manage the ebb and flow of strength across multiple market segments. It does this by measuring shorter term moving averages performance compared to longer term moving average performance. And it's based on the same moving average distance research that we use throughout the site, throughout our rankings, throughout our models and blends. Each of these components is then compared to a neutral cash value of 1.000 as shown on the screenshot here. The number of market segments is made up of the 9 style boxes: large cap growth, small cap value, things like that. We then add in Dow Jones Industrials, NASDAQ 100, Russell 3000. And then we add in some of the specific S&P 500 sectors that are thought to either be leading or to be concurrent with the general market action. So we have consumer cyclicals, financials, industrials, and technology as for the specific sectors. So we rank all of these as shown. And as the number of market segments ranked superior to cash increases, then that signifies a positive Starpath indicator view. And conversely, if the number of market segments ranked above cash decreases, the Starpath indicator is negative, which is bearish. So right now we see here that IJK, which is mid-cap growth, has had its shorter term moving average fall below its longer term moving average, and it's giving a value ratio below 1, triggering the sell that we traded on this week or this morning, and was activated after market close on Friday. Let's see here. Okay, this is kind of a more graphical depiction of the history. And Steve has done incredible work by making the raw data available on the website. And so also on the to-do list will be a graphical representation like I have shown below on this chart from another analysis program. The green highlighted areas on the top, that's the S&P 500, show some of the previous sell signals. And in most cases, as you can tell, the indicator gave a timely sell signal prior to a deeper decline. However, it's important to note that some of these signals were also just minor pullbacks in an overall uptrend. And we really don't know, once a correction begins, we really don't know the severity or how long it's going to last until we get more information, and which takes more time. Let's see. So that's pretty much a coverage of the Starpath and the way it works and the way it reacts through some recent history. Now let's talk about some of the observations in the general market. Here's the Magnificent Seven, a composite of the Mag 7. There were some red flags signaling that all was not well in the general market. One where high momentum starts to consolidate and not really confirming gains in the overall market. That can be a red flag. Um, so if one of these areas, like in this case, the Mag 7, if it's not replaced by a different sector or area of the market, then that can lead to further decline. And unfortunately, it doesn't appear that any other areas of the market have stepped up to replace the Mag 7. Um, after a consolidation, if the markets don't have the strength to continue upwards, then the path of least resistance becomes a retreat. Here's the Russell 1000% of stocks above the 200-day moving average up top, and down below is showing the S&P 500 again. Um, so looking down below at the S&P 500, the recent action that we've seen the last few weeks is actually very similar to what we saw maybe up here around July of 2024. The drawdown is so far has been about the same. Um, there's a key difference, however. If you look at the top pane in July, um, the percentage of stocks above the 200-day never did drop below 50. It stayed right there around the high 50s, low 60s at its worst, and then the market continued in an uptrend. In this case, you can see that the percentage topped out around November of last year, and as the market continued uh, rebounding and then climbing a little bit into just most recently, that has not been confirmed by percentage of stocks above their 200-day on the Russell 1000. So that has also been a little concerning and leads me to believe that we're most likely, uh, unfortunately, not going to see kind of a quick rebound type of scenario. Again, that's just my opinion. And we use our indicators to make that final judgment call of what we actually trade. This part is really just kind of, peering into a crystal ball, a cloudy crystal ball, and just kind of discerning what we think might happen. Um, Finally, let's take a look at the VIX. The VIX is also has another is also known as the fear gauge, and it's another way to measure market sentiment. It's based on expectations of future volatility in the S&P 500 by options traders. So while the overall VIX level is important, and we can still glean some information based on its price movement. So this chart shows the S&P 500 in the middle. At the bottom is the 15-day rate of change of VIX. So we're measuring the percentage change of VIX. And in this case, this was from after Friday's close. We're right up against the point where you can see on the bottom pane where previous kind of near-term corrections have rebounded, have started to rebound. So if based on this, a partially bullish sign is that we should be nearing an area of a bounce. However, what's negative is that we're nowhere near either the rate of change or the overall level of VIX that we would be looking to see for any sort of capitulation. And now this, even with today, Matt Weed at PRS and I were watching it closely, and even today we didn't see any indication of that capitulation panic type selling that often marks a bottom once a bear market gets started. So unfortunately, it's not as optimistic of a message that I'd normally like to share, um, but that's what I've got. Let's see if my research analyst, Zach, has anything. Zach, do you have anything you'd like to add?
Yep. I could just jump in. For those of you that are wondering, using your star models, Starman Max, your Harmony models, we are quite close to a star flux signal change, the point that it could happen even at close of market today. So be ready for another major change coming up. But in terms of our delta V indicator and our galactic shield indicator, both of those are longer term indicators, which galactic shield won't update until the end of the month, and delta V, the closest it could update this coming Friday, is the nearest term that could update. So if you have models using those, that would be the next time that they would see a change there.
Okay, I think that's it. Is there any, we're open for questions if anybody would like to ask away.
Yeah, thanks. And as a reminder to you guys, open up the questions tab there, and feel free to either go ahead and type in there, and then it looks like, let's see here. Polly has a question, so we're going to go ahead and Polly, you should be able to jump in with your question now.
Is there a time, I'm just getting kind of started moving toward the TAMP program, but is there any time and Sam's doing his best to teach me. He's got a big task ahead of him, but is there any time that everything just completely goes to cash? I guess the reason I asked that is I started liquidating with the research that's not to your level, but started leaving the market almost completely back on February 21st. And was mostly out of the market all of last week. Is there a time that everything literally just goes to cash?
Yes, absolutely. But it steps in and out, it phases in and out based on the indicator. So, which we find, to be the best, the most comfortable, survivable investment journey that we can provide. It's very risky to be in all cash. The queue is kind of set up for a possible short covering rally now. We've had enough selling where, Tesla was down, I think 15% today. So now you're potentially in a position where any sort of spark of buying could lead to further short covering, which could, again, I think it would be temporary. I don't think it'll hold. But it's kind of it's being all in or all out is kind of an uncomfortable position. Especially during 2008, the best days of the market are often in the middle of the depths of bear markets, those huge short covering rallies where the Dow's up 1,200 points in the middle of late 2008. And if you're sitting all in cash, your clients are going to be calling, yeah, what's my account balance? I saw the market was up 1,200 points, and it's kind of, not a pleasant to be able to say you're all the way, you didn't make anything today. So anyways, our philosophy is to step in and step out, and we're in the process of stepping out right now.
I'd like to note that if you're in Delta V Starpath, Delta V Calendar Starpath, the breakaway stocks, sector rotation 2, those typically you'll have a defensive indicator that you'll be following now looking forward. So that could be calendar effects, which has those 11 round trip trades a year. Also Delta V bond, which is that long-term bond indicator. There's still some growth opportunity with bonds and in the seasonal equities that we'll be seeing before we would then completely exit to a defensive position like a money market or cash equivalent.
Thanks, gents. Okay, Adam Hartung, I'm going to open up for you to ask your question.
All right, I'm just curious. You went through the 15 ETFs that get compared to cash for the Starpath indicator. I was just curious, are they the same ETFs that they always have been, going all the way back to the original Sherman sheets? I know there were some slight modifications that needed to be made, when you guys took over. Were there any changes to the actual symbols that you compare cash to?
Those symbols have always been consistently the same. They've all been now for the testing. we like our testing to go all the way back to like 2000 or 2001. And so in some cases, we may have had to use a proxy ticker symbol that would maybe a mutual fund that would give equivalent data. But the actual symbols themselves are the same as they've always been. The only thing, what you're referring to, the only thing that did change was the BIL. And the reason for that change was the rising interest rate environment made it so that Starpath was not entering the market as it was rallying because interest rates were, BIL was rallying right along with the market. So it was rising interest rates was not taken into consideration when the indicator was first developed because it hadn't been, we haven't seen it since the mid to late 70s. And the testing environment didn't go back that far. There's actually even very little useful data that goes back that far for a lot of the proxies that we use. So
Yeah, thank you.
You're welcome. You're welcome. Sector 2 is yeah, I think Daniel and Sam are answering that. Yeah, that went out today because Starpath is one of the 2 indicators that needs to be long, and so that one went out.
Asta Sanders, I'm going to open up so you can ask your question.
Hi. So you talked about Starpath indicator. I'm in sector rotation 2 model. So how about delta V? Like you said, it possibly could change this Friday, but what is it based on and why it would, if something, let's say we have another, whatever, 1,000 points down tomorrow, why wouldn't it change tomorrow? How does, maybe you can just refresh, how delta V works and what makes it change.
Sure, excellent question. Delta V is a long-term indicator, and it's based on weekly data, and that's kind of one of the necessities of a longer term indicator is you have to move up a time frame. It's based on price action, specifically of the Russell 3000. So we're looking at the entire stock market as much as we can, and then we're looking at it on a slower time frame. And even though we all kind of cringe that while they're using a longer time frame, they could miss some market movement by not looking at daily or a shorter time frame. But honestly, when you actually test, do thousands of tests, you realize that a lot of the day-to-day short-term movements are noise, and oftentimes they get a big downdraft will be followed by an updraft in the next day or 2 days, and by the end of the week, it might be a rather flat week of trading with masking a ton of volatility that occurred during the week. So in this case, we do have daily indicators already that I feel react quick enough, and then the delta V is a good. You really just have to look at a long-term chart of it to realize that it's never going to call the top, it's never going to call the bottom, but it will keep you correctly positioned for the majority of major market moves, which is, what we're trying to do. I think that's
Thanks,
it.
Tony. Ernie, I think you have a question, Ernie, right?
Can you hear me?
Yep.
Okay.
Yes,
So Starflux is basically what Boss was?
No, Starpath is.
Starpath. Okay. So, and is this I remember with that, once cash began to move up, it typically moved from the bottom to the top. Is that still the same with what you're
Well, not necessarily. I mean, we're strictly looking at the movement of one position.
okay.
And just because it begins moving in one position does not mean that it's going to track all the way to the opposite side. It could move just a few positions and then reverse and start back down again, and it would trigger a buy. So
I think important on that is just in the command module recently, underneath the Starpath section, if you go to the indicators, it's first tab, you'll see Starpath, and then below it is that list of the segments and cash. And Ernie, to your point, The trigger that just happened is because it was sitting at the bottom of the list and it started to move up. But the
Correct.
point, and so directionally, that's what's happening. That's what's triggering the negative. But to Tony's point, at any given point, if that shifts the other way, then we're going to shift the other way. So just this page here is a good one for everybody to start to realize. This was just on the mission newsletter previously. So you'd have to go into the PDF to see it, but now you actually can see it right here on this indicators and rankings page, and you can see where cash is right there. You can see IJK at 0.998, which is what Tony kind of shared in his presentation today, and so you'll just want to watch
Right.
that day to day.
Okay, it just seemed that from, I've been in it a long time, and it seems like back when that Bill used to say that it often would go a long ways up, not always to the top, but once it started to move up, it typically would slowly move its way up. So I was wondering if it's still the same, if that's kind of what we're
Well,
maybe expect.
we're not lawyers, but it depends, right? We don't, as Bill also used to say, we don't say what ought to be, we say what is. And so the fact of the matter is we can't predict what those values are going to be tomorrow, but we are committed to watching them. I would say one important shift in that dynamic, the only real change, because I think Adam earlier mentioned some of the changes that we made. The main change on this one was really what represents cash. So previously it was following BIL, which was a challenge for us. And so having a value of 1 as market neutrality really is the true indicator, so that when you take that short term versus long term and you get a value below 1, you know that it's under market neutrality. So yeah, keep your eye on it. Who knows what it's going to do?
No, nobody knows what it's going to do. It's just kind of an indicator, which is what we live by.
That's right. Yeah, that's right. And it hasn't changed. To your point, it is a big change in the sense that it hasn't shifted in a fair amount of time, but that doesn't mean that it can't shift back.
Yeah. Okay. Thank you.
Thanks, gents. Steve Athanasi.
Thank you. To the gentleman's point, though, I think the point he's trying to make is for the Starpath to go back to a buy, cash has to fall all the way back to the bottom.
No,
Correct?
no, nope, just
No.
one move. No, nope. No, that the original, it was directional cash was, no, I mean, it's here, I can, let me see if I can share screen again. Let's see here. I share, and Steve will be building at some point. He'll be building this as well, but so down here would show the buys and sell signals. So right now we went from 16 to 15 as the movement of cash, and so that triggered the sell. But there's other instances here where it didn't do an entire round trip. Now, these were entire round trips from top to bottom, but it's possible we'll see a rebound and then a correction will set in again and we'll get a sell signal again. So we don't have to make a move all the way from one side to the other, but markets generally trend. And so, once it begins, it can, it does often continue, but not always. So we just follow the indicators as always.
All right. Thank you, Tony. Mark Ruhlman.
Yes, thank you. This is very instructive and I appreciate it. And I see that we're recording this. Will we get a link to the recording?
Yes, you will. It'll come out in email, so you guys will all have it in an email that you can go and. Adam's trying to get the thumbs up feature. It'll come out in an email, so you'll have it on an email. And then also, as a reminder, anytime we have these webinars, I'm going to just share again so that you can see. But if you once you're in the command module, if you go here to marketing, for some reason in marketing the page is not found. Once you're in here, you'll see there's a section of videos, and they're all replay videos in there. So you'll easily be able to go in there and grab them all out of there, so that you can see all of the previous videos. I'm going to see if this works. No, for some reason we've got an issue there, which I'll fix immediately so that you guys can access. But all of the videos are all held on the command module, all the replays, so you can go and watch them all.
What's the TAMP up to?
Price wise or AUM?
AUM.
We're I saw yesterday's report. I think we're at 968 million or so.
Congratulations.
Thank you. Yeah, we're grateful. I'm grateful and blessed. Hey, Tony, there was a question on here that I know Sam and Daniel were typing some answers to, but I think it's worth the group hearing it maybe more broadly, which is how's the original star flux still positive and the long short negative? The question was, isn't it the old Shermanator signal? Seems odd that Starpath went negative, but the Harmony signal's still in the market. So can you kind of speak broadly to the differences between the two?
Right, definitely. Yeah, Starflux is an entirely different indicator than Starpath. And there's two versions of it because when you do a lot of trading over a long period of time, the market goes up 70% of the time over history. So it's only really declining 30%. And when you're trading long neutral, that's going to be the situation 70% of the time. To actually go short, that burden of proof becomes much steeper, because if you go short and you're wrong, there's a good chance that you're going to be severely damaged. You're going to get beat up a lot quicker. And for the majority of our clientele, long neutral is really the most appropriate for 99% of client accounts. So that's the main difference, is that it's kind of the difference between a civil trial and a criminal trial when you're looking at the market. The civil, you can just sit in a diversified portfolio and do pretty well during a long-term uptrend, but making the decision to trade short is a much different beast, and so therefore that necessitated two different indicators for Starflux. And again, that one only applies to on the base models, the Starflux long short model. As far as its difference to Starpath, it's based on volatility. It's whereas Starpath uses the 16 different areas of the market. In this case, we're looking at volatility bands around the Russell 3000, and the logic being that over a given time, there's an acceptable level of volatility that occurs. And once we breach that level on either the upside or the downside, it's more likely than not that we're seeing a change in trend rather than just a correction or significant market action. So, Starflux will go negative. I'm 99.9% positive once we get all the data in for tonight. But yeah, two different beasts for two different market environments.
All right, I don't see any more open questions in the chat. I don't see any more raised hands. So I'm going to give it maybe 30 seconds or so here for anyone with a question before we move on. And then obviously, like was said, this will be recorded and sent out, so you guys will have access to go back and look at it. And I would say too, at this point, this is why having a webinar on a monthly basis is important for you guys to think through kind of what the questions are. We've been sending out those surveys. We'll continue to send out a survey, and really, it's a really simple survey. It's a one question. What would you guys like to know about? What would you guys find the most valuable? How can we better serve you and give more detail around what it is that we offer for you guys to be able to best run your practice? So take those seriously, and when we say ask us a question that we'd love to answer, we mean that. We've got one last question here from Mark, so I'm going to unmute Mark, and then I think we'll call it a day. Go ahead, Mark.
There I am. Thanks again. I'm curious. I don't use the publications like I probably should. Is there any chance that there might be a publication that would be of the sort that we could pass along to our clients in light of the heat of the moment? Thank you.
We publish on a weekly basis the mission newsletter Client View. And so that is something that has that Zach creates and that you can send to clients.
Mark, are you kind of thinking some sort of commentary that's sort of bedrocked by how our signals operate to talk about what's happening like today or last week or with the signal changes? Is that the essence of your question?
Well, historically, I have found that my clients really like knowing a number, and a number is great until the number is a huge red negative one. And then, having some commentary that wraps around the strategy makes good sense. I can tongue dance 38 years now, but if there's something that y'all would consider publishing that would be something that we could distribute easily, get approval, of course, by our firm. But I think that it would be very helpful.
Yeah, my suggestion there would be if you reach out after the call to Tony and the team, and just kind of give an idea of, hey, can you give me some commentary? We can provide you some one-off commentary, but then you can run through your own compliance approval. That's really just a recap of what it is that's kind of happening, and we can pull that out as a service, no problem.
Thank you.
Pleasure.
Just to finish, this is the marketing tab that you'll go to. This is where you'll see we have our previous 2 subscriber briefing webinars. Today's will be up there very shortly. But with that, thank you so much for joining. We're looking forward to seeing you and talking to you again soon. Thank you all.